All right, welcome back. Well, we've got several really exciting and informed guests joining us over the next 75 minutes to take a look at the trajectory of the metals and mining markets as we head into 2024. We're really excited about the level of expertise and insight that this group brings, so we can't thank them enough for joining us. And of course, today's webinar is made possible by our fine partners and friends. There are several of them. We can't thank them enough, and we can't do this programming without them. So a big thank you goes out to Argentina Lithium and Energy, Austin Gold Corp, Foremost Lithium, and Nova Minerals. Thank you to each of you. Before we get started, I'd urge you folks to check out upcoming Benzinga events. We do host a live webinar every other Thursday. We, of course, have a full lineup of in-person events as well coming up in 2024. You can learn about these events and more at benzinga.com/events. All right, let's get the program underway. Joining us to kick off our first session and welcome our first guest is my Benzinga colleague, Zineid Suleiman. So please join me in welcoming Zineid to the virtual stage.
Everyone, one thing that we love to do here at Benzinga is to get executives from publicly traded companies so we can get all the great questions answered directly from them. And today we've got a great interview from Jason Bernard, who is the CEO of Foremost Lithium. Ticker on the NASDAQ is FMST, and ticker on the Canadian Stock Exchange is FAT. Jason, thank you so much for joining us.
Thanks for having me, Z. I'm happy to be here.
Absolutely. We've got so much to get into. It should be a great conversation to look under the hood. But before we get started, if you could explain it to me like I'm five, what is it that your company does?
Our company is a hard rock lithium exploration company. Our goal is the production of lithium oxide ore to produce lithium hydroxide, which is available to go into electric vehicle batteries. We have four distinct lithium projects, 43,000 plus acres in Snow Lake, Manitoba. We have a current resource there on our Zoro property. We have 40 plus pegmatite dikes. So we're in the business of drilling off reserves of lithium. We'll be there in our winter drill program, increasing our tonnage and increasing our reserves. And we also are in the business of finding new discoveries. We found one already, and we will be drilling our other three properties, Peg North, Grass River, and Jean Lake, upcoming this winter. And the company also is looking forward to many other corporate developments that allow us to finance further lithium exploration.
I appreciate the insights. So there's so much about lithium that's interesting. But I'm more curious, just to start us off here, there's so many other lithium exploration and mining companies out there, right? So what really kind of sets you apart currently from your competitors?
Well, see, I think I mentioned it. We do have a current 43101 compliant, or it's also SK 1300 compliant resource on our Zoro property. That resource is on one dike. We have 16 dikes on at Zoro. So we're set apart because we do have a reserve, and we're looking forward to increasing tonnage at that current reserve. We also have a distinct advantage insofar as we are located near one of the only hard rock lithium spodumene concentrate mines in North America. There's only two. One is 400 miles away from us. It's called the Tanko mine. So we have a unique situation here in North America where we could blast and dig and crush on site our ore and send it to that mine for a future revenue stream. So that is very unique. There's only two mines in all of North America. We're near one at Snow Lake, Manitoba. Additionally, we have many different assets in the lithium space. So we're in the business of buying and selling and doing joint ventures on properties. So we have a distinct advantage on companies that do not have a reserve, do not have the ability to ship out ore to get a revenue stream in the future. So that's how I would differentiate us between your normal lithium exploration companies that, are sort of looking for their first discovery.
All right, so we talked about what separates you from the competitors. I want to talk about a recent trend that I've kind of seen and get your take on it. In my opinion, the electric vehicle market is what fueled the need for lithium as much as it did. Recent reports, right, suggest that EV car sales have slowed down a bit. What's your kind of take on that?
My take is that the sales. There's a reports out that Q3 sales in North America increased by 50% for electric vehicles. Now, if that's not meeting previous sort of explosive growth, I feel that's fine. The growth globally and especially in North America in electric vehicles is here to stay. Lithium, yes, is fueled by electric vehicle production, and I feel that going forward in the future years, we'll see much more demand as uh, basically people are getting more affordable electric vehicles that they can purchase. So there will be an increase in vehicles, but a decrease in those more expensive sort of luxury vehicles. I feel the future is bright for lithium.
And that kind of brings me to my next point about how lithium pricing has decreased. I'd say about like 60 to 70% from all-time highs over a year ago. Do you see that rebounding? And if so, how does it kind of impact a company like yourself with the fluctuation?
Well, I do see it rebounding. We've had, a quadrupling of price over the years, and we've had a pullback recently where the lithium hydroxide price has sort of hit its, let's call it 52-week bottom again. I feel that this has created lower valuations in lithium explorers and lithium mining companies. And I feel that the sort of glut that China has because they've sort of hoarded a lot of supply as they were worried about supply in the future. I feel the demand will carry on, and that as the world eats through that current surplus of lithium hydroxide, demand will outstrip supply, and you'll see that commodity rebound. And I feel, in my opinion, rebound strongly. So valuations are good. You've sort of got to buy when valuations are good. So this is creating opportunities to joint venture and get involved with other assets. There are opportunities in sort of the lower commodity lithium hydroxide price space, and we're looking forward to taking advantage of future higher prices.
Now, you do see the market rebounding. You look forward to seeing the future prices and the higher ones, especially. Where do you kind of see the lithium market in, let's say, like the next 5 to 10 years? And more importantly, where do you see Foremost Lithium in that aspect as well, 5 to 10 years?
Well, great question, Z. I see Foremost Lithium benefiting by increasing its reserves and benefiting being here in North America. The Inflation Reduction Act has created a need for onshoring the lithium supply chain onto North America and taking away, whether it's geopolitical wise or just to achieve the tax credits that come when you do buy a vehicle with lithium sourced from North America. Also, there are green credits that are coming to North America. So an extra situation here in North America where people want to see the lithium supply chain uh, uh, onshored, onshore to North America. So there's an extra opportunity for companies like Foremost Lithium to do very well in that environment. And I see as prices increase in the future and our reserves increase in the future, that will be very good for shareholders and for shareholder value. So we'll benefit greatly.
And, definitely a big congratulations to you, as we mentioned at the top of the show, for you being listed on the NASDAQ as you trade under the symbol FMST. What are some comparable companies that we can look at that are currently trading, and what makes them similar to Foremost?
So thank you. Yes, that was quite the milestone. we in August 22nd listed on the Nasdaq under the symbol FMST. We are one of the only hard rock lithium exploration and mining companies on the Nasdaq. So this gives us a unique opportunity in a very large market, the go-to symbol when you want to go and own lithium in the ground on the Nasdaq. Comparable companies, we have one called Atlas Lithium. The company is probably about 8 months ahead of us, but yet they trade at over 10 times our valuation. They're in Brazil. They're near the Sigma mine. The Sigma mine, $4.5 billion concentrate mine in Brazil. They're in proximity to that, so we share that story with them as we are in the proximity to the Tanko mine in Manitoba. Also, they have started drilling. Their drills are doing very well, and it's had a very good share price and for their shareholders. We will be drilling upcoming in our winter season. So although we're a little behind them, we share a story. Stocks you can trade that are hard rock lithium stories on the Nasdaq. Piedmont, PLL on the Nasdaq, was $1 billion valuation. They're down a bit from that now, but they actually own 25% of the NAL mine. That's the only other hard rock lithium mine in North America, and they also own reserves in the area. So there are a couple situations, a couple companies you can trade, but it's limited on the Nasdaq, and that's why we went and listed there and look forward to bringing our story to U.S. institutional and retail investors.
Let's talk about the story of Lithium Lane. That's the project, and I'm curious what stages they are at.
So the Lithium Lane projects are Zorro, Peg North, Grass River, and Jean Lake. Zorro, where we had our first discovery in 2018. The stock did very well. We raised the money. We drilled off our initial maiden resource. So Zorro, quite a bit ahead of other properties that we have. We are going back with the drills to Zorro. So that's the first time since 2018. And we look forward to drilling off not only where we have our reserve, but also we'll be in Dike 8, Dike 3. There's 16 dikes in total on Zorro. So Zorro a little further ahead. We have spent the money to de-risk drilling for new discoveries on G Lake, Grass River, and Peg North. And I look forward to drilling coming up on those three properties whereby we've spent the money, time de-risking targets. And so the Lithium Lane properties, number one, Zorro Reserve, and the others will begin there looking for new discoveries in the new year.
It's definitely going to be interesting what type of new discoveries you do get going into 2024, especially with the Brazil and everything else that you had mentioned. But something else that you had brought up was the Winston Gold and Silver project as well. That kind of caught my attention. If you could dive into it just a little bit more.
Certainly. Winston Gold Silver is 100% owned, 2,800-acre gold silver mining situation. The company IPO'd on this project, so Foremost was involved in gold silver exploration in its early days. The project has been worth upwards of $15 million before. Right now, we're getting no value for our gold silver situation. We've graded. This is a high grade property that is graded between 20 grams per ton gold and up to 4,000 grams per ton silver on its sampling. And it's a vein system. We will go in and explore upcoming here. And our bankers in New York would like us to look at the situation as a spin-off. So that's a then share for shareholders of Foremost so that we can monetize on this asset and get the value we deserve because there's none currently involved in Foremost valuation. So moving forward with Winston Gold Silver and a wholly owned asset.
We've talked so much, Jason, about the past. We've talked about the success of the present as well. I'd love to kind of dive into what folks can expect into the future as well. So if you have any outlines, any forecasts for foremost in the coming months, I'd love to get your insights.
My forecast would involve the catalysts and the milestones that will be achieved by going and putting the drills into our Zorro property, and also going to explore for more discoveries on our other lithium lane properties. So when you go and you drill off and you see um, grades and tonnage, you should get the corresponding joy in the market, and hopefully the corresponding valuation that comes with that. So expect that in the near future from Foremost Lithium as well. I do feel that the small caps and micro cap companies have been not getting the attention. In fact, they've had their worst valuations since the 2020 COVID situation. So valuations are low. Heading into January and February, the talking heads are saying, well, the FANG stocks are doing well. There's 10 companies that are doing well out there, but the risk on situation rather than risk off should lead to better valuations on the Nasdaq for your microcap and small cap companies. So these are events to look forward to in the near future for Foremost.
All right. Well, we appreciate the insight. It was so great to have a conversation with you because, I mean, lithium is something that you always hear about on the news and articles, but it's kind of like, hey, what is it? But what are the companies that are running it as well, right? We like here at Benzinga, we like to talk about the thing behind the thing. And it's no question that y'all are that type of, it fits the bill of what you're doing. But thank you so much, Jason. I appreciate you for hanging out with us.
Thanks, Z. Thanks for having me.
Absolutely. And thank you, chat, for viewing this interview as well. That was Jason Bernard, CEO of Foremost Lithium. Ticker on the NASDAQ is FMST, and ticker on the Canadian Stock Exchange is FAT. We'll see you next time.
Thanks, Sinead and James. Terrific conversation. We really appreciate the peek behind the curtain at Foremost Lithium. Well done. Plenty more to come. We're going to keep the program rolling now with another of Benzinga's finest, my colleague, Piero Chingari. Let's welcome Piero to the stage. Hey, Piero.
Good morning, everyone, and welcome again to this Benzinga Metals and Mining Market webinar. So I'm a staff writer here at Benzinga, and in the next 30 minutes, I will be moderating two exciting panels, which will feature outstanding speakers. First of all, it's a real pleasure to introduce Dennis Higgs, who is the president of Austin Gold Corporation. Dennis has an impressive 35-year career with experience in funding companies, securing financing, taking them public, and building successful ventures. Welcome to this Benzinga webinar, Dennis.
Thank you. Thank you for the introduction. I have a presentation for Austin Gold. Should I go ahead and start the presentation?
Yes, sure, Dennis. If you could give us a bit of insight into what Austin Gold does, and what are your projects you're currently working on?
Sure. Okay. Yes, I'm president of Austin Gold, and our slogan is "We are serial company builders working with serial mine finders." Austin Gold offers an unparalleled combination of experienced leadership working with serial mine finders in the southwestern U.S., including Nevada, which is the world's #1 gold producer by area and home to some of the world's largest gold mines. So this is my forward-looking statement. This presentation is on our website. I will be making forward-looking statements. So Austin Gold key takeaways were listed on the NYSE American under the symbol AUST. The gold price forecasts range from $2,000 per ounce to $35,000 per ounce this decade. And that highest price forecast is by the very respectable Goring and Rosenwag Natural Resource Market Commentary in August of this year. We have an experienced team with a proven track record of discovery and advancing projects. Our directors have been involved in the building of $3 billion plus companies, 3 of them. Our projects are located in favorable geologic settings for discovery, and the early exploration expenditures have already been completed. We're in the southwestern United States and Nevada, in elephant country, where the prizes are worth multi-billions of dollars. And of course, the biggest returns can accrue when a discovery is made. So we have a compelling business model for value realization. The team has the relationships and experience to provide similar billion-dollar success to Austin Gold. So very briefly, gold is a chemical element with a symbol AU. Of course, you'll notice the AU in our logo. Its chief industrial use is in corrosion resistant electrical connectors and all types of computerized devices, computers, communications equipment, spacecraft, jet aircraft engines, spacesuits, etc. The consumption of gold produced in the world currently is about 50% in jewelry, 40% in investments, and 10% in industry. Gold's monetary usage of the metal dates back at least 5,000 years to ancient Egyptian times. Gold has always played an important role in the international monetary system. Gold has been widely used throughout the world as money for efficient exchange versus barter and to store wealth in hoards. Mints produce standardized gold bullion, coins, bars, and other units of fixed weight and purity. Gold is still our safest store of value. It is real, you can touch it, and it holds its value. That's why central banks accumulate it. So directors of Austin Gold, the people, are always the foundation of any business. This Austin team has experience in exploration, mine finance, mine development, ESG, and mine operations. We have every segment of the industry covered. The Austin Board of Directors have been involved in the building of $3 billion plus companies. 4 of our directors were previously in management and director roles with Silver Standard, which is now called SSR Mining, has a market cap of $2.4 billion. 3 of our directors were with Pretium. They founded it and built it over 10 years. And Pretium was acquired by Newcrest in March of 2022 for $2.8 billion. 2 of our directors were with Uranus Energy in senior management roles before it was acquired by Energy Fuels. And 2 of us are currently directors of Energy Fuels, which trades on the NYSE American with the symbol UUUU. Now has a market cap of $1.3 billion. We have the relationships and experience to provide similar billion-dollar success to Austin Gold. And we have an advisory board with 2 economic geologists. In their careers, Mr. Perry Durning and Mr. Bud Hillmeyer have discovered over 1 billion ounces of silver and over 10 million ounces of gold. So we have very successful mine finders working with us. So what is Austin Gold all about? Why exploration? This is what Austin Gold is all about, discovery. Pierre Lassonde was one of the founders of Franco, Nevada, the first gold royalty company. Pierre Lassonde is a billionaire. His serious wealth accumulation started with the discovery of the world-class gold strike deposit in the heart of the Carlin Trend in Nevada. 30 years ago, he created this chart that outlines the company life stages that has now become the foundation in the junior mining business. Very briefly, junior resource companies go through exploration, discovery, then feasibility, development, and ultimately production. You can clearly see during the discovery phase, which is circled in this chart, where some of the greatest rewards accrue to the shareholders. This is where we believe that we have positioned Austin Gold, AUST. So let's talk about our projects. Very briefly, we have 4 projects, 3 in Nevada and 1 in southeastern Oregon. All of our projects have had previous exploration efforts, and previous exploration, each of these projects over the years by other companies, suggests potential for significant discoveries. Austin Gold brings modern exploration techniques and team experience. Very briefly, Nevada, area of the United States and specifically Nevada produces more gold per unit area than anywhere else on the planet. The area I've circled is in Nevada is one of the 3 richest gold endowments in the world. Nevada's Carlin-type gold deposits exceed 250 million ounces, making it one of only 6 gold belts in the world with greater than 200 million ounces of gold. So Nevada is the world's #1 gold producer by area and home to some of the world's largest gold mines. Let's talk about Oregon briefly, one of our projects, Stockade Mountain. Just look at the picture here. Stockade Mountain is a classic, large, gold and silver bearing project. It was previously drilled by 3 major mining companies, BHP, Phelps Dodge, and Placer Dome, but their drilling was shallow. They were looking for open pit opportunity. The maximum depth of hole drilled was about 430 feet. The holes encountered what's called a stockwork. A stockwork, if you imagine the windshield of your car gets shattered, that's what a stockwork looks like, a series of veinlets. And those veinlets at Stockade Mountain carry significant gold in them. But the stockwork had a feeder system. That is the target for our drilling. A feeder system fed that stockwork that allowed that gold to be deposited near the surface. So we are drilling for the target encircled in this picture, where we expect to find the main veins that fed that stockwork system. And we started drilling stockwork earlier this month. Stockade earlier this month. And we look forward to seeing results. Lone Mountain Project. This is one of our projects in Nevada. I won't discuss all of them. I'll just discuss this one. The Lone Mountain Project comprises 13 square miles of a highly mineralized window in the middle of one of the largest gold districts in the world, of course, called the Lone Mountain Window. The window is where erosion has carved a hole in the upper plate and exposed the lower plate. It is the lower plate carbonate rocks exposed in these windows that host these large Carlin-type gold deposits in these districts. So the windows, or the elephant gold deposits, are exposed. On this map, the lower plate windows are shaded in light blue and the gold deposits are colored in red. The Carlin trend is circled in the lower left in this map. You can see the light blue lower plate exposed within that circled area, and of course the red deposits. The Carlin trend is currently host to well over 100 million ounces of gold, and there's already been mined in that same area, 100 million ounces of gold. Very rich area. Jarrett Canyon, circled on the upper right, is Jarrett Canyon District, which has produced over 9 million ounces. Again, you can see the light blue shading for the lower plate, and of course the red gold deposits. And then circled in the middle right side is our Lone Mountain Project, and you can see the lower plate area shaded again in light blue. This project has been owned by one family for over 60 years and is underexplored. The Lone Mountain property exposes one of about a dozen lower plate carbonate windows in north central Nevada. And these large Carlin-type deposits in the Carlin Trend and Jarrett Canyon are localized in or near these carbonate windows. So that brings us back to the Lassonde curve. The Austin Gold projects have had past exploration with initial results that are encouraging. Exploration with discovery is where you can get some of the biggest returns, and the rewards can be orders of magnitude. We are in the exploration stage on this chart. We believe that Austin Gold is where the star is on this chart. Austin Gold brings current models of gold deposit genesis, modern exploration techniques, and systematic exploration programs to our projects located in politically stable jurisdictions. Environmental, social, and governance. ESG is important these days. The caliber of ESG at Austin Gold is exceptional for a company of this size. In past projects, our team has been instrumental in the environmental, social, and governance aspects of the projects they've developed in the past. And one of our directors, Barb Filas, is internationally recognized in the mining sector in the disciplines of management, environmental and social responsibility, and sustainability. And earlier this year, she wrote a paper titled Responsible Environmental, Social, and Governance in Mining. So sustainability is an integral part of the way we do our business and will continue to be so. Share capital summary. We're listed on the NYSE American under the symbol AUST. Our current share price is about 70 cents. Our 1 year high low is $1.80 high and 54-cent low. Our current cash position is $10 million. Our market cap is $9.3 million. We are trading at or below our cash value. And 50.1%, a little over 50% of the shares are owned by directors and management. There's 13.25 million shares outstanding. Options and warrant for 3.5 million. So fully diluted is about 16.8 million shares.
Dennis, I'd
Yes.
like to ask you one thing exactly.
Yes.
So what caught my attention was that the stock price is currently trading below IPO level.
Yes.
There was almost a third of value disappearing in 2023. So why do you think the market is overlooking to your company's value. Why should folks consider investing in Austin Gold right now, and which horizon would you suggest to focus on?
Sure. No, that's a good question. So the junior gold, actually, the sector has been market malaise, I guess, is one answer. Junior gold exploration is out of favor right now, and you must be a contrarian to do well in any market, but certainly in a junior resource speculation. So this represents a buying opportunity. And in fact, before we drill, I can't tell you what is in the ground on our projects at Austin Gold and whether we will have a discovery, for example, on the projects we're currently working. However, we are exploring for large gold deposits in areas known for hosting large gold deposits. The prize is potentially worth billions of dollars. And when there's a lottery with $1 billion prize, there are a lot of people buying the tickets and only one potential winner. But with a potential $1 billion prize at Austin Gold, if we have a discovery, all shareholders are potential winners. And you can't win the lottery if you don't have a ticket. So maybe I can stop sharing and we can have a discussion then for questions.
Yeah, I mean, unfortunately, our time slot is almost over. But I would like to hear from you. What would be your price forecast? Or actually, I have one question.
Yes.
Are you aiming for a potential takeover by a larger gold miner, as the ultimate gold for Austin Gold, and which time horizon do you think could this happen?
A very fair question. If we have a 1 million ounce plus discovery at Stockade, it's very likely we'd have be a takeover target. If we have a discovery at Lone Mountain, which has bigger potential, some of the largest gold mines in the world are 20 miles away from our project at Lone Mountain. I can tell you right now, we would definitely be a takeover target. However, having said all of that, we have the expertise with our team of directors to develop and build the mine and operate it ourselves. So we have the expertise, and the advantage of that is that if there was an interest by a bigger company to take us over, our expertise, the knowledge and ability to operate and develop the mine ourselves would, I think, get us a higher valuation. So the timeline, we just started drilling Stockade. Results, well, we will know sometime within the next 2 to 3 weeks whether we're into the vein. And of course, we won't be able to have actual results until we assay, which could take another 6 weeks. So we're looking at mid-January probably for results from drilling at Stockade. And the Lone Mountain, which is actually a bigger project, probably won't be drilling until sometime early to mid next year at the earliest. But Stockade is up and we're drilling right now. So we'll see.
So thank you so much, Dennis, for joining us today. It was incredibly interesting to learn about the junior miners business, Austin Gold, and I hope to meet you again on the next webinar. And of course, good luck with your project, and see you in 2024 to discuss your developments.
Thank you. I look forward to that. Hopefully,
we'll see you next time. Thanks, Dennis.
Okay.
So let's now move on to the next panel. It's an absolute pleasure to introduce Ima Casanova, Portfolio Manager, Gold and Precious Metals, VanEck. Good morning, Ima, and welcome to this Benzinga webinar.
Good morning, Piero. Thank you for having me.
So, good morning. I would like to start by saying that when we last met 3 months ago, it was mid-July, about the end of July. So gold prices were roughly trading at the same level as they are today. However, at that time, the Federal Reserve was still hiking interest rates. The domestic consumption in the US economy was robust, was super strong. The GDP experienced a very strong third quarter. Yet gold mining stocks we're trading at discounted valuation compared to the price of gold. If you remember, we discussed exactly this matter in our previous webinar. Fast forward to the present day, we have seen gold prices rise by 10% since the start of the conflict between Israel and Hamas. Everyone thinks right now the Fed is done hiking interest rates. Actually, the rate market is pricing in 4 rate cuts in 2024. Nevertheless, gold mining stocks continue to trade at even more significant discounts compared to the price of gold. If we look, for example, at the price difference between the GDX ETF and the price of gold. So what's driving this trend? What's going on in this sector? Is this an exceptional buying opportunity, or is it more of a value trap?
Yeah, thank you, Piero. Yeah, the question is very timely, I think. As you mentioned, we have seen the gold stocks underperform the metal this year, and really for the last couple of years. Last year, we saw some of that underperformance, and in a way, we were able to understand because there was all that inflation that nobody saw coming into the industry, companies disappointed on their cost guidance. So we had a little bit more there to justify that underperformance. To be clear, this is a point I like to always stress. You own gold stocks. You put gold stocks in your portfolio because you want to benefit from the leverage that they have to the gold price. So clearly in a year where gold is up, I think today almost 9%, you would expect the gold stocks to be doing much better. We write a monthly blog, which you're all welcome to subscribe to on our VanEck website. And in this last month, in October, we wrote precisely about this. What is happening? Why aren't gold stocks delivering that leverage? And there are a few key reasons that we think might be impacting the sector and explaining some of these underperformance. To go back to why you want to go own gold stocks, any particular move in the gold price, whether it be up or down, translates into a larger move in the profit margins of these companies. And that's what creates that leverage. And that's why you want to have that mix of gold and gold stocks in your portfolio. So what is driving this underperformance? We outlined 4 main reasons that we can think are sort of feeding this gap. The first one is, if you think about gold performance this year, what we've seen is really a lack of investment demand. Investment demand historically has been the main driver of gold prices. So here we are in a year where investment demand is down and gold is still up, which is not what we expect. But what we know is that the central banks have been buying gold, and this strong buying, record levels in 22, and again approaching record levels again, perhaps surpassing the 22 levels. Central banks have been very strong net buyers of gold. That has been supporting gold prices. In contrast, gold stocks don't have another center of demand that sort of makes up for the lack of investment demand. And this, we think, has impacted performance. In other words, central banks don't buy gold stocks, they buy gold. If they bought gold stocks, perhaps, the gold stocks would be doing a little better in this environment. The other reason we outline is, back to the 22 point, 2023 has been a much better year as far as gold mining companies meeting their cost and production guidance targets. However, we have seen cost inflation. Even if you look at throughout the analyst estimates, some estimate costs have been, in 23 are up 5% from 22. Some estimate costs might, by the end of the year, they might be up to 8% compared to 22. So there has been some cost increases, and we believe part of the performance of the gold stocks is reflecting the fact that we haven't seen margins expand as much as you would expect on the back of a rising gold price. That's number 2. Number 3, I use October as an example because October was an interesting month where gold was trending to 2,000, and yet gold stocks started to trade down, lose some of their earlier gains as gold was moving up. So what was driving that? We think sometimes when broader equity market is selling off, you might get some of the gold, the gold equities also sell off temporarily. So that could have impacted performance also in October. And then more broadly, country-specific risks. The mining sector, the sentiment around the mining sector or gold mining stocks could have been impacted by some development. I'll mention the Panama issues currently ongoing with the government basically having to revise or potentially eliminate a law that would have allowed for a large, very important copper project in the country, a copper mine, to continue to operate successfully. So that headline risk, and we saw Burkina Faso also increase royalties in the month of October. So we also think that could have impacted risk sentiment towards the sector. Those are some of the things we believe. With all that said, we see gold equities as a group significantly undervalued at historically low valuation multiple. The stocks have never been this trading at these levels, and yet fundamentally we do see this sector in great shape with good balance sheets, unhedged for the most part, with good capital allocation discipline, paying dividends. So there is a bit of what we call a market dislocation for the gold equities at present, in our view.
Absolutely interesting. So I have a question. Why do you consider gold miners one of the cheapest equity industry right now in the market? What are the metrics you are looking at? And related to that, what would be the perfect scenario for a re-rating of the 2024 profit outlook for these companies? Maybe if you can give us an idea about where do you see gold prices trade in 2024?
Yeah, so let's start with the first part of your question, how gold stocks versus other sectors, valuation metrics. If we look at any of the evaluation metrics right now, whether it's price to NAV, price to cash flow, price to earnings, we included an interesting metric, which was in this monthly blog that I'm referencing, where it was, what is the gold price discounted right now in the gold stocks? What price would you need to plug in your valuation models to reach the current price, and how does that compare to the spot price? And what we find is that that's somewhere around a 20% discount to current gold prices. So that gives you an idea, and that's obviously tells story, but what tells more of a story is that historically they had never traded at such a deep discount to the gold price. If you go back to the times where the gold equities were in trouble, that 2011, 14, 15 frame, where there was a lot of capital and operating cost pressures and issues for this sector, even then the discount was lower. And if you go back to sort of previous bull market levels, it used to be a big premium actually to the gold price. So that's one metric that we showed in our monthly blog for October that tells a story. But again, price to cash flow currently as a group, 7 or 6, 7, 8 versus an average for the last 10 years 13, or bull market multiples of 20. So clearly a huge de-rating of the sector. Your question is, how do we achieve that re-rating? Then, if they're so undervalued, if they're trading such low multiples, how and when do we get to that re-rating of the sector? And I think it is coming. Key is for these companies to maintain control of costs, because obviously we want margins to expand as the gold price rises. But most importantly, and to your question, the gold price. What's the outlook for the gold price? That's the main driver of these gold stocks. The higher the price goes, and the higher it stays at elevated, the more time is spent at elevated levels, then the more of a reaction we expect from the gold stocks. Our outlook for gold prices is very constructive. It's kind of a perfect setup. Unfortunately, we have two tragic wars currently ongoing. So geopolitically, all that risk is obviously supported of gold, which tends to be a safe haven. We are obviously looks, and we got some jobless claims today that seem to be supporting the case that you mentioned, that the Fed is probably done and that potentially will start cutting next year. That's gold positives, because usually higher real rates are negative for gold. And the outlook for an economy to start to slow down, perhaps the recession word is out of the picture, perhaps not. But certainly, I think the expectation is that things will start to slow down under the pressure of still very high interest rates, which will put pressure on the economy and other sectors. And so the outlook for gold is in the medium and longer term, we think is very positive. We're just shy of 2000 today. Clearly, the all-time high of 2075 looks very well within reach in our view. That's sort of been that's where we will put our target, 2075. We can see gold approaching those levels next year comfortably. And with that, we expect, given the lagging performance of gold stocks relative to gold, we expect the gold stocks to make that up and outperform gold in that environment.
Thank you so much, Ima, for these insights. We have the last 2 minutes before ending our discussion today. At this point in time, investors and traders joining this webinar would like to get your favorite 3 or 4 or 5 mining stocks which have the potential to rocket in 2024.
Yeah, we won't use that language because I'll get in trouble.
Okay.
But
they
I
could
will
outperform.
tell you.
Let's say outperform.
I will tell you 4 of the names that are top holdings in the active gold strategies that I manage, and that are high quality names. We're all about high quality companies that continue to add value. Our top holding in the active strategy is Alamos Gold. It's a company that has executed very well in delivering growth. Have just made some acquisitions that are now really delivering value. In particular, they have a strong growth profile in the next year and forward, driven by an ongoing expansion of their Island Gold Mine in Canada. And so they continue to perform against expectations. And so we really like that company. And as I said, it's the top holding of our active gold strategies at the moment. I'll also highlight Wheaton Precious Metals. It is also a top holding in our fund. And it's topical because they just announced a 500+ million transaction. Wheaton Precious Metals is a streamer and royalty company. It's a business model that we really like. I've always, for those that are not familiar, the best way I can explain it is streamers and royalty companies are sort of a hybrid between owning the metal and owning the producers. It's sort of a middle of the road play. And Wheaton continues to execute well, have good exposure, have good silver exposure, which, we like gold. We also like silver. Silver has been lagging gold. So there could be some outperformance by silver coming up. So that's also a good play. And then I'll mention Bellevue Gold, which is an emerging gold producer, Australian gold producer. Great record of delivering this new project online, on time and on budget. They just poured first gold last few weeks and look set to have a successful ramp up, which in one of the most de-risked ramp ups that I think I've seen in my career. So we're very excited about that name. VGLAU is the ticker. And lastly, Endeavor Gold Mining, one of my favorite names. Great track record of organic growth, continues to add reserves and resources in what is a very aggressive exploration target they have to continue to increase reserve and add life to their mines. Well-run company, meets their targets, meets their expectations. West Africa, ticker EDV. The West Africa headline risk for that region has probably affected the stock, but the company continues to demonstrate that they can successfully operate and advance their projects. So those are my 4 recommendations and names we like in this space right now.
Thank you so much. Thank you so much for your time, Ima. It's been an absolute pleasure to have you here with us today. And I hope to see you again in the next webinar. And who knows, maybe we will have a completely different market situation in front of us for gold miners. Thank you so much.
Thank you.
Let's now move to the next panel, which will be moderated by Aaron Bree and will feature Argentina Lithium.
Hey, Piero, how's it going, man? How you doing? All right, guys, let's go ahead and get into it. I'm going to be welcoming on the Vice President of Exploration at Argentina Lithium, Miles Rideout. Without further ado, let's bring Miles on the program. Hey, Miles, how are you doing today?
Hi, Aaron. We're very well here. It's a pleasure to receive your invitation.
Yeah, of course. So before we get started, do you want to just give us a brief overview of Argentina Lithium?
Will do. Our company is an exploration stage company based in Vancouver and trading on the Toronto Venture Exchange. Our management group is the Grosso Group, which has been active in Argentina over the last 30 years and has produced 4 world-class discoveries. 3 of those were in precious metals, and the 4th is a new uranium district. And so Argentina Lithium is our public company to repeat that success in the lithium space. So over the last 5 years, we've invested a lot of time and a little bit of money in developing a large property portfolio. When I'm talking about properties, then I'm talking about solar properties in northwest Argentina in the lithium triangle. Now, we can invest anywhere we like, but we think that the Argentine district within the lithium triangle is the best investment destination for lithium. The projects in the area are lithium brines, so you're not building a mine. What you do is to take a project in development, you're drilling out a well field basically, and you're pumping brines and extracting lithium from the brines. If you look at the lithium triangle, that would comprise portions of Bolivia, Chile, and northwest Argentina. Both Bolivia and Chile, the lithium itself is considered strategic mineral, and to take a project ahead, you would need to involve the government. And as a consequence, we see the projects in those areas don't seem to generate a lot of value for their investors. In contrast, you come to Argentina, you're investing in a brine project in northwestern Argentina. These are pro-mining provinces, and the lithium projects are managed by the province the same way any other mineral deposit would be. So your permitting process is the same for mining. You go into production, you're paying a 3% net smelter royalty to the province, and you take your mine forward for a 15-year, 20-year, 30-year mine life. We've then focused in that area. We've acquired 67,000 hectares of solar properties. Those are focused on 4 highly prospective lithium salars. Our 2 lead projects are on what we would term mid-grade salars, and we've chosen project areas which are adjacent to major producers. So our Rincon project is it's located in Salta province, and we have 5,200 hectares adjacent to Rio Tinto Mining's Rincon project. Rio Tinto has a large mid-grade resource there. Our objective at Rincon is drill out our projects, demonstrate that we have the same grades and significant production potential, and then take that, declare the resource, take the project through pre-feasibility, pre-production, and then into a full-scale production plan. Our second core project is in the Antofalla Salar. This is our Antofalla North project, and we're applying a very similar strategy. Our neighbor to the immediate south is Albemarle Corporation. They are the world's 2nd largest lithium producer. They have a very large mid-grade resource on their property. We're just completing our permitting. We expect to start drilling next year. Our objective will be to drill out our project, demonstrate that we have similar brines under our project, declare a resource, go through pre-feasibility, and then come up with a production plan. We're well financed. This was a news that came out about a month and a half ago. Stellantis Corporation, they are Chrysler, Peugeot, Fiat, that group, invested in our company $90 million US. So we've been working with Stellantis over about the last 10 months, going through all the due diligence process they require. They visited all of our projects. We've been working with their consulting engineers, explaining our plan. Stellantis has come back to us saying, how can our company accelerate our project development to get these projects into production more quickly? And we've responded, I think, favorably to Stellantis, and Stellantis went ahead with their $90 million investment. What that means is,
Wow.
yeah, so we've acquired the property package. We're focused on the 2 lead projects beside major producers, and we're funded for what we anticipate the next 3 years at least, which will allow us to get those 2 projects through all the resource stages and into pre-feasibility and develop a production plan. We have Stellantis pushing us to move as quickly as is reasonable. And I think that this investment was transformative for our company. Previously, it would be difficult to see how we could, how a Canadian junior could go into full-scale production. But with a big brother like Stellantis, okay, now we see how. I think they'll be holding our hand the entire way. And what they want from us is they want our projects to go into production. Part of that agreement was an offtake agreement, so they would be acquiring a minor discount to market price, lithium from us over the first 7 years of our commercial production. They're looking forward to that occurring. We're looking forward to that occurring. I think our investors are behind us. I think this is a great time for our company.
Yeah, I mean, that's incredible news there on the Stellantis investment. Congratulations, Miles, on that. There are a lot of different metals out there. Miles, a lot of people like gold, silver, etc. Why do you think investors should care about lithium right now?
This is a question that I really like responding to because it's an interesting story. So the lithium industry is a tremendous growth industry. If you look at, I like gold and I like silver and I like copper. So I'm a metals guy, and my background is mining. I'm an exploration geophysicist. So I've worked a long time in those areas. But the difference with lithium is the growth that we anticipate for this industry. If you roll back the clock, say 15 years, the lithium production and the value of the lithium industry was small. And I've prepared actually a special case. If you go back to 2013, all the world's lithium production had the value equivalent to about 1 world-class copper deposit, 1 porphyry copper deposit. Over the last 10 years, the worldwide production of lithium has increased 4-fold, and the value of lithium carbonate has increased by almost 10 times.
Wow.
So that means the lithium industry has gone from what looks like 1 world-class copper deposit to today, it looks like, say, 40 world-class copper deposits. But the growth ramp is still scaling up. This is being driven, now by legislation from North America and Europe, whereby, going into, say, the 2030, 2035 period, they're legislating that new car sales will be dominated by electric vehicles. And this means the consumption will be enormous. Now, this is information which Stellantis showed us. Their consumption requirement, when they take their production into EVs, the consumption requirement looks like all of today's production from Latin America, and that's just one of, say, 8 large automotive producers, which are almost all of them are moving whole scale into EV production. The exception would be Toyota, which is looking at more in hybrid vehicles and other types of alternative energy storage. But there's a lot of major automotive producers which are looking for tying up their supply lines and buying into their supply lines. So I think for an investor looking at the metals market, what that investor could anticipate is that the lithium explorers that are executing effectively today will be prime targets for acquisition or investment by the leading automotive manufacturers. I think that we're an early story in this respect, but I think we're going to see a lot more of these deals occurring in the coming years.
Yeah, I mean, right now, lithium, like you said, is just with all the demand for electric vehicles, for new types of electric batteries, for things outside of cars. I mean, it's just a big time for a lot of exploration, lithium, other types of metals. Miles, why should investors care about Argentina lithium compared to other lithium companies?
I think one item is our stage of development. So we have the properties that we were seeking. We've secured those properties, and so we have our first tier properties, which I described, and we have follow-on properties, which after we've got our two core projects, well on the way towards production, we'll move our exploration assets onto very large solar projects where we also have properties. So, we'll be doing resource development for the next 10 years. But the next 3 years is going to be a huge growth for us. We're funded to take these really first-class assets through to resource stage, pre-feasibility, and pre-production. We're not going to be tapping into our investors to fund that work. That funding's in place. And so I think that our investors are going to, not tomorrow, but say over the next 2 to 3 years, as we go through our resource announcements and other advances in our project development, I think that our investors are going to reap a lot of benefits. Return on their investment many times over is what I anticipate.
Well, there you have it. Miles Rideout, thank you for joining our webinar today. Again, Argentina Lithium, the ticker is on the screen there on the OTC markets as what is the ticker again? PNXLF on the screen. PNXLF on the OTC markets as well as on some of the Canadian exchanges. Miles, thank you again for joining us today.
Thank you very much.
All righty, guys. We're gonna be going. We're gonna welcome back Matt on the stream, and Matt Simmons from Benzinga. How are we doing, Matt?
I'm good, Aaron. Thanks, brother. Well done as always. Really appreciate Miles and Argentina Lithium's perspective and insight as well. So nice job.
Yeah, it's a cool company. I love learning more about the different metals. And Miles, obviously, like he said, has background from not just lithium, but from gold, copper. And just getting insights from guys like that have so many years experience is so valuable.
No question. And that's why we're here, right? We want our audience to understand what sets some of these companies apart from, what in many cases are crowded competitive landscape. So nicely done, Aaron. Thank you as always.
Appreciate it, Matt.
All right. Well, listen, we've got one more session for you folks. I'd say we saved the best for last, but I don't want to put too much pressure on our next guest, who is Christopher Gertyson. He's Executive Director and CEO of Nova Minerals. Christopher, if you join me on stage, I know you've got a lot of ground to cover over the next 12 or 13 minutes. So I'd like to ask you to do so. And then I'm going to rejoin you to try to put a bow on today's event and on some of what you present. So I will see you shortly, but take it away.
Great. Thanks, Matt. Okay, so it's the Estelle Gold Project, where Nova Minerals is developing North America's next major gold trend, as you'll see, quite a large project. At a glance, it's a very large land holding, 513 square kilometers of state of Alaska claim blocks, where to date we've defined almost 10 million ounces across 2 deposits, bulk tonnage deposit up north at Corbell, and what's really become the jewel in the crown, the RPM deposit down south, very high-grade core there. In between, 20 other known prospects at various stages of advancement. We've been mainly focused on the gold. However, as you'll see, we have very exciting antimony, silver, and copper showings as well on the project. It's a little fly around. We're located in the Tintina Gold Province, been one of the most prolific belts here in recent decades. Some names you might recognize. This is the land of the intrusive related gold system. Absolutely massive deposits. And as you can see, 10 million plus ounce deposits, not uncommon in our district. We just sit on the southern end of that belt. Zooming right in, looking east towards Anchorage and the main population center here in Alaska, about 100 miles from Anchorage. Infrastructure, always so important with these projects in terms of power. We have a number of options there. The blue line is the proposed gas pipeline going out to the Donlin project to the west of us. That'll pass about 10 miles to the north of us. So there's a potential offtake there. Also just running a transmission line to the gas fields and the main power plant that serves Anchorage and the population center here as well. Also, interestingly, we're looking at micronuclear reactors. There's a big push for that in Alaska by a lot of the remote native Alaskan villages. And of course, we could always, the fallback position is generators, which are very efficient and clean these days as well. So we'll choose what fits our timeline and our needs. In terms of access, we have a beautiful 4,000 foot plus airstrip at the site that we support the project year round. The pink line is our winter road, very common in this part of the world. It is a seasonal road. And now we're becoming very excited about the red line. This is the proposed West Susitna Access Road project, state-funded project. They're looking to break ground on that in 2025. Just to note, all of this is state land. The road, the infrastructure, as well as the project. No federal land or native corporation land that we have out here, all state land. So the project is a district scale play, 35-kilometer long mineralized corridor. We've been focused on four main areas, of course, Corbel and RPM, which is where we have our resources. And then in the center, which has been the focus of our exploration at Stony and Train. Spinning around, looking north now, our neighbor there you can see is U.S. Gold Mining, also listed on the NASDAQ. Their deposits there are porphyry copper gold deposits. And so, very similar like geology. So we also have porphyry copper gold potential on our side as well. In fact, we have a number of prospects that we are chasing that. But looking at the actual deposits now down south, let's go to RPM. At RPM, relatively new discovery. To date, we've defined that really high-grade core of 340,000 ounces. That zone there is 820,000 ounces in total. And then the most recent discovery, RPM South, well, there's 420,000 ounces identified in our first maiden resource there. Here's the drilling, and you can see the gray lines with the assay results are previous drilling. The black lines are the drilling that we've completed this year. And a lot of those assay results, we're still waiting for it. Let's look at some of the drill results. Absolutely spectacular here. 132 meters at 10.1 grams per ton within a larger intercept of 400 meters at 3.5 grams per ton in this whole RPM 005 in that box on the bottom. And I could just go on and on here we repeated this over and over in that RPM North Bonanza zone. RPM South, nothing as spectacular, but starting to shape up. 94 meters at a gram, very wide intercepts, 344 meters at half a gram, and internal to that, a couple of almost 40 meters at a gram there at RPM South. So we're still working on that. Let's spin it around and look at RPM North, that Bonanza zone. This is what you see here on this cross section is at a 1 gram per ton cutoff, the grade shell. And even at that high cutoff, it holds together very nicely, very broad, very continuous. Some of the deeper drill holes we've drilled there down into the valley, actually not that deep under the surface, but down in the valley, you can see another 1 gram per ton zone there starting to take shape. Now, if I put on the 0.3 gram per ton grade shell, you can see it really starts to bulk out. And that, in our recent scoping study, is, of course, what the pits drive down on that material. Here now, the resource classification in terms of the confidence of the resources. Of course, there's the measured portion in that really high, dense RPM North Bonanza zone. Indicated resources also there, and then the remainder remains inferred. So what we've really been focused on now is, of course, proving up and expanding this resource. You can see here we've drilled up dip of that Bonanza zone to prove up and these inferred resources here and expand that. We've also drilled some holes down dip, and the rocks there look great to expand and increase that resource in the Bonanza zone. It's still open to the east, and we have closed it off here to the west. And what we have there is actually a fault and offsetting the RPM Valley. That's the same intrusive, just offset. And then, of course, we have RPM South up here. So Valley and South, all our geological information shows that these two areas connect. And so that's our main target there for resource upside. There it is, 600 meters of strike length of potential resource upside. We've already clipped the northern end of that target intrusive here. You can see these results, 76 meters at 1.2, 103 meters at a gram, 30 meters at 2 grams. So it's starting to take shape. It's looking very good, and we hope to find more of those really high-grade blowout zones there. But if the RPM deposit in total is a 1 kilometer strike length already with all of those zones combined. So there's RPM. Let's move over here just a short distance, 6 kilometers to the north to one of our hottest exploration targets, another massive intrusive related gold system here. And you can see some of the highest results, 80 grams per ton, a few 30 grams per ton, 40 grams per ton, a number of zones there that we're excited about here. You know, the Shoeshine area, here the Muddy Creek area, here is Train Prospect proper, and then Trumpet. This is our first target area there for our next drilling campaign to try to establish a third resource at the Estelle project is right here to between Train and Trumpet. 1.5 kilometers of strike length there, and you can see this photo on the right-hand side, very thick, high-grade sheeted veins ripping through that area that our drilling will target to, again, try to establish a third resource. Now let's head north along our proposed road network. We've already done the high-level survey there, and we hope to break ground on these roads next year. Moving past our fully winterized 80-man camp there with all the facilities, on-site prep lab, and move north up here to the Corbel deposit area. Number of anomalies and prospects we've been working on there. I really want to focus on these black dots. That's where we have our deposits. Corbel, Maine, 6.6 million ounces, and already 3 million of those ounces in the indicated category. And then the nearby Cathedral deposit, where a maiden resource first round of drilling yielded 2 million ounces. At Corbel, Maine, absolutely massive bulk tonnage deposit, 2.5 kilometer strike length on that thing. And then 500 meters away, the first drilling at Cathedral. At a minimum, another Corbel, Maine starting to take shape at Cathedral there. But Corbel, Maine, which is the main deposit there, this is a long section looking east. Lower grade deposit, bulk tonnage, hundreds of millions of tons here. There is a higher grade core in the center of feeder zone. And what do I mean by that? I mean 101 meters at 1.3 grams per ton, 113 meters at 1 gram per ton. And so that feeder zone, if I put on the 0.5 gram per ton grade shell, you can see it encompasses that feeder zone, that higher grade zone, and it really is quite continuous through there. Spinning around, now looking northwest, let's put on the 0.3 gram per ton grade shell, and it really starts to bulk out. This thing is already over 800 million tons here. And what do we intend to do with that? And with some of these lower grades especially. So you can see here's the higher grade feeder structure. That'll be direct mill feed. And this lower grade material, if you understand this deposit, there's sheeted veins in there. When you selectively sample the veins, they're running ounces per ton, extreme high grades. And it's not a grade issue per se. It's a vein density is less out in these lower grade zones. And so we intend to employ ore sorting, XRT density ore sorting, where our test work has shown we can take 0.3, 0.4 gram material and upgrade it up to 6 grams per ton. And that's how we intend to optimize this particular deposit. Here, the resource classification, most in-pit resources there are indicated. We've been working on this years before we even found RPM. Is still some inferred, some potential upside there. And then, of course, Cathedral here, which is all inferred, maiden resource, lots of work still to do there. To follow up some of these rock chips, and this is what I'm talking about. Some of these chips, these samples are taken from that vein material. You can see 114 grams per ton, 98 grams per ton, and that's what the ore sorters will separate out when we process this material. Speaking of processing, let's zoom into our proposed plant site. This has all been scoped out in our scoping study. Right next to the pit, short haul, so important. And look at our process flow sheet based on extensive metallurgical test work. Nothing fancy going here, off-the-shelf conventional technology. We crush, we mill, then we concentrate through flotation. And then that concentrate, we regrind that down to 22 microns, and then we leach it, and we get over 96% recovery already at the scoping level. It is particulate gold. It can be quite easily liberated as the the recovery values show there. And then later on, after RPM and that higher grade material at Korbel is processed, then we get into the lower grade material with the ore sorting comes online. A lot of mines working on looking for old stockpiles at the end of their mine life. We got 10 plus years of material that we can ore sort there at Korbel and potentially at RPM as well. Now, that's Korbel. Let's move to another exploration target in the Stony area. Stony is a little bit of a different animal. Not only do we have high-grade gold there, but also high-grade copper and silver as well. So polymetallic system here, and also very exciting, we're starting to see antimony there this year. And speaking of antimony, we've also made another discovery here at Stibium, and this is a gold antimony target. And, you know, in the interest of time, I won't get into antimony too much, but it is one of the most critical strategic metals known to man that makes our life go round and round. So many civilian and defense applications use antimony, and there's no U.S. production of antimony. And so we're finding antimony in some of our gold deposits. Anything over 0.1% has the potential to add some serious and significant byproduct credits in terms of the economics of the deposits. You can see here 60.5% antimony, massive stibnite out there. Stibnite, of course, is the primary ore mineral for antimony that we're finding there. And then it sticks as well. New discovery this year, seeing some gold. But look at this high grade antimony there in this area, 21%, 19% antimony. That is just spectacular, massive stibnite there as well. And we hope to take advantage of this opportunity and secure supply chain for the U.S. So that's the project. You can see district scale play. We'll be out there for decades when we finally get mining out there. Here's our resource growth story. It's quite a story. In 4 years, we've gone from 2.5 million ounces to almost 10 million ounces to date. And of course, it's not just about quantity, it's about quality of resources. We recognize that, and our main objective right now is proving these resources up into those measured and indicated categories. And we believe that work will yield secondary bonus of getting further resource growth. We did complete a scoping study earlier this year, kind of a snapshot in time to see how viable is this project looking. And you can see the results came back quite positive. 17-year mine life, 11-month payback period. That's with that high-grade RPM of 360,000 ounces of production coming in that first year and then going steady state for the remainder of the mine life at 130,000 ounces, $650 million NPV, 53% internal rate of return. CapEx, less than $400 million, producing almost 2.3 million ounces over that 17 years. So that's the foundation, a base to build on as we move forward now into our PFS, pre-feasibility study. Those numbers are set to improve, but that's a good starting point for us for sure. And here's the growth opportunity over time. It's been a brutal market. Haven't received much love for that scoping study. So perhaps you think that'd be baked in here over time, but nevertheless, we keep pushing forward on two paths really. Our path to production with RPM Korbel, and also, of course, the exciting exploration with further discoveries due to come online, which we've reported recently, some of those in the news in the last few weeks. So what's our plan in the next 12 to 18 months? Continue drilling, move more of these resources in the measured and indicated, grow that resource, moving into PFS with further studies and test work, and of course, exploration discoveries. Now, at the end of the day, when you sit back and you look high level, big picture, what's developing here, I spent a lot of time in my career down in the Carlin Trend with the likes of Newmont and Barrick. And really, certainly the geology is different, but in terms of scale and potential resource endowment over the long term, this project has the potential to be the Carlin of the North for sure. So there's a lot of near, medium, and long-term opportunity on this project. And with that, I thank you. Big story, whirlwind tour. And I think, if people go to our website, this content and more, you'll find, dig a bit deeper, you'll find we're onto something very special here. So I'll leave it at that, Matt, for today.
Christopher, well done. I had to tell you, I love the visualization tool. Really incredibly powerful to see the size and the scale, and certainly some of the results, these drill sites you guys are seeing. Will be really interesting to see, the next 6 and 12 months. How things go for you guys, and would certainly welcome you back to get an update next year on doing so.
That'd be great. It'd be my pleasure.
I'd love to wrap with one question, and I recognize you hit on this throughout your presentation, but just I'd like you to succinctly sort of talk to our audience. about the difference between Nova Minerals and frankly, the competitors that are out in the landscape. Give us a 30-second soundbite about what folks should leave this webinar understanding about Nova.
Yeah, I think we're severely undervalued. I don't know if the reason for that is because we're an ASX listed company, also on the OTC. But if you look at our direct peers, let's choose our neighbor there, which we pointed out in the presentation, U.S. Gold Mining Inc., as well as let's take Snowline Resources, for example, that's over there on the Yukon side, also on the intrusive related gold system, high profile recent project. You look at their valuations compared to ours. I mean, what do we have over? Those are great projects, no doubt. But over our competitors, we're much more advanced, moving into PFS now. You can see those spectacular drill results at RPM. We need to repeat those, but you can see the potential at RPM. So that sets us apart. Also, when you look at Nova Minerals as a company, this is our flagship, the Estelle project, but we also have strategic investments in lithium, as your previous guest, in Manitoba with Snow Lake Resources, a company we built and spun off on the NASDAQ, still have a 37% stakeholding there, and a rare earth company in Australia, Azra. And so those are some considerations to take into account when looking at the valuation compared to our peers, right? And then on the Alaskan front, I pointed out that we're all on state land. Some projects in Alaska, have to deal with federal land and native corporation lands, all being on state land. That lends itself to a very pleasant day-to-day working environment with the state organizations to do our work. And then when it comes to permitting, that should be much more streamlined as well.
Well, Christopher, can't thank you enough for sharing, not only your deep expertise and your many years of experience, but also a unique and exclusive look at what's going on at Nova. So again, would welcome you back in a few months to get an update. But until then, thanks so much and good luck.
Thank you so much. Pleasure to be with you.
Likewise. Well, listen, folks, we're out of time. I hope you enjoyed this as much as I did. One final thank you to all of our guests for their deep expertise and analysis throughout the event. One final thank you to our sponsors. Of course, they make this all possible. So thank you to Argentina Lithium and Energy, Austin Gold Corp, Foremost Lithium, and Nova Minerals. And also a special thank you to VanEx Ema Casanova for her valuable insight, as always. And finally, a big thank you to all of you for taking the time out of your day to join us. I hope you've enjoyed it. We hope to see you at another Benzinga event very soon. Until then, be well. Thanks.